Ladies and gentlemen, we're heading into a big week for the stock market. We have a lot to cover in this video. We have 7 companies to go over. We'll break down the charts, and of course, we'll go over the earnings estimates as all of these companies are set to report earnings this week. So guys, hit the like button, make sure to subscribe, and of course, don't forget to get up to 20 stocks from Moomoo with at least a $100 deposit. Use that link down below or go to stocksurfest.com/Moomoo and feel free to sign up to my mailing list if you want me to send you my top 3 stocks every single Monday morning for free right to your email, guys. That's also linked down below. And with that being said, let's dive right into the video. So again, we have 7 companies to break down today, all of which are reporting earnings. And of course, all of the major companies, if you will, although these are very big companies we're going to talk about today, but all the big tech, all the big flashy names, a lot of those for the most part already reported earnings, but the ones that we have this week are still very, very important. And we're heading into a week where the stock market saw a big red day on Monday morning, where we got all the way down to about 508, 507 on SPY, 420 on Triple Q, which you guys can see right here if I pull it up and zoom in a little bit. So we're coming off of a week where we got hit very aggressively early on in the week, and we've rebounded slightly throughout the the rest of the week. So we can see here on Monday we got beaten up on Triple Q. We got down to 420, 430, and now as of Friday we're at 450, and SPY is also looking pretty good on the 5-day, 5-minute. Nice recovery throughout the week, and this puts us at a very pivotal spot on the chart here, which I've covered before. Are we going to break this downtrend, or are we going to get rejected and start dumping off yet again? You guys see that on SPY here and on Triple Q. You guys see the same thing, right? So it's a moment of truth type of week for the overall stock market, at least when it comes to the charts. And, we'll see how it goes. Monday, Tuesday, we'll see how the price action looks. Of course, we're getting the unemployment data as we do every single, Thursday, the unemployment claims data, rather, shall I say. And we get that every Thursday morning. And that kind of caused a rally this past Thursday, as that number was way better than expected. And if that happens again, man, who knows? Maybe the rally could continue, on Thursday, on Friday, but that leaves Monday, Tuesday, Wednesday. What's going to happen early in the week? It's anybody's best guess. But overall, we're in a downtrend still. Keep that in mind. Let me know your thoughts in the comments down below, guys. And let's break down now these stocks. Number 1, Home Depot, ticker symbol HD, which this stock's at about $350 per share. Okay, looks like we're down about $30-ish from the recent high, or about 7%. And on the 4-hour chart, it looks like it actually looks really good here, in my opinion. Not the best, but it looks like we are a bit oversold. We have come down a bit. Looks like we're right at the moving average here, the 180 SMA. Looks like it's trying to act as support. So let's see if Home Depot could actually hold the mid 300s as support. That would be ideal here. Maybe we could start bouncing off the bottom of this channel. But they're reporting earnings, it looks like, here on Tuesday the 13th. Before the bell, usually in the morning. So they're in the morning. They're looking to do earnings per share, guys, of $4.52 versus $4.65 from last year on revenue of $43 billion. And Home Depot is always an important company to watch out for when it comes to earnings, because it gives you an idea of how the consumer is doing. Think about it. If the economy is doing well, people are doing well, the consumer's doing well, they're more, willing to do house projects. Maybe fix that deck in the backyard, or do some more landscaping, do this, do that, right? Add an addition to their house or something crazy. I don't know. You guys know what I mean. People are more willing to do that, and I always look at, for Home Depot and for Lowe's, for that matter, both of these, for their earnings, I always look at, I forget what it's called, the average ticket per customer, something like that. The average number that they spend per trip. It's a specific metric. I forget what it's called, but I always look at that for Home Depot and Lowe's. So we'll see how the consumer's doing, guys. And if the earnings surprise, expect for a pop at the bottom of this channel. Walmart is another one that I'm looking at for this week, ticker symbol WMT, and this stock has been crushing it. I think it's up like 30% year to date. Very good performance for Walmart, and this company is reporting earnings on, it looks like, the 15th, so they're on Thursday in the morning. EPS for them is expected at 64 cents versus the 56 cents from last year on revenue of $154 billion, guys. Very crazy how much Walmart does on the top line, and this is a company that honestly can thrive through amazing economic times, obviously, bad economic times as well. So this is one where, people go for cheaper things, right? And they have anything you could think of. You can get anything you could think of. Groceries, clothes, this, that, shoes. I mean, you name it. Things for your house. Everything's at Walmart pretty much for very reasonable prices, right? So that's why people will continue to go there no matter what type of market we're in. Sure, will they suffer a little bit during a recession? Potentially, yeah, but not nearly as much as other people, or not people, but businesses in the space, like Target, for example. They'll suffer more than Walmart. A lot of other businesses will as well. So that could be a reason why we've ran up so much, not because we're heading into a recession, but of just how safe, quote unquote safe, not every stock or not any stock's 100% safe, but how safe it is in that kind of market. I feel like Walmart will thrive, and we'll see, man. We'll see. Overall, like I said, 64 cents EPS on $154 billion revenue. Keep your eyes on that, and overall, the uptrend still holding. Let's see if we get the bounce and maybe break out again. So Cisco is another one. CSCO's the ticker. I believe they're on Wednesday. Let me double check that. Yeah, Wednesday after the bell, and this stock has not been doing well. Clearly, we're down, what, $15 a share, or not that much. Geez, $7 to $10 a share from the recent highs here. And on the 3-year chart, it looks pretty bad. I mean, geez, what's been going on with Cisco? Not too sure there, but on the max chart, we're still looking decent, but still well under where we were during the dot-com bubble, which is nuts here on Cisco, guys. Either way, that's a whole nother topic for a whole nother video. Cisco right now, they're on Wednesday after the bell. They're looking to do 85 cents versus $1.08 in earnings per share from last year, so their EPS will come down a little bit. Same with their revenue. Revenue, $12.39 billion versus $14.45 billion from last year, and that's projected to be down 14% year over year. Not the best, and maybe a lot of that's priced into the stock already. We're arguably a little oversold here. I don't know. Time will tell. But, yeah, Cisco's not looking pretty. I'm not the biggest fan of this stock. Same with the one that we're about to talk about right now, Alibaba, ticker symbol BABA. This company's reporting, I think, on Thursday. Thursday the 15th in the morning. And I used to own Alibaba. I was one of those guys that was like, yeah, what could go wrong, man? I'm buying a very good company here at a cheap price. And look, 4 or 5 years later, it hasn't really recovered. I mean, I thought this thing was going to bounce back in a year or two, but I learned a lesson there. Lost some money in Alibaba. Nothing crazy, because I did start buying. Let's pull this max chart up. So you guys remember we hit 320 about 4-ish years ago. So we started dumping aggressively. I started buying here, I would say probably in the mid-hundreds, 150-ish. Bought more as it got into the 80s, 90s, whatever. And it just kept going down for like a year or two. And I'm like, yeah, I'm not holding this thing anymore. Cut the loss about a year and a half ago, probably at this point, or a year rather. I forget the timeline. I'm screwing that up. But either way, I'm not in it anymore. And, I'm glad I'm not, because it was a freaking headache watching that stock every quarter, every day, pretty much. But yeah, looks like on the chart, we're not looking that bad. Looks like we are breaking out of a multi-month resistance right now. We do have some inverse head and shoulders action right here on the 4-hour chart. You guys might see that. Let me pull it up. You guys got the right shoulder, got the head right here if it wants to work. There we go. Left shoulder, butchered that, but you get it. You get the point. Looks pretty good on the chart. But again, for me as an investment, I'm not interested right now. But as a trade, maybe I'll consider it. They're looking to do $2.12 earnings per share versus $2.38 from last year on revenue of $34.75 billion. Let's see if Alibaba could start pushing this spot right here. Let me draw this out and show you guys. At about $80 per share, that was the high from the beginning of June, middle of July, early August, up until really a couple days ago. So if Baba can get out of there, man, keep your eyes on it. Maybe a big move could be coming in the short term. Maybe an earnings type move we could see there. But for now, we're still under that big $80 resistance. And we also have JD this week, guys. JD.com, another Chinese company, which I'm not interested in owning. Again, same reason for Alibaba. I mean, there's a lot of reasons, but it's just one that it looks great on paper, but at the end of the day, you don't actually own the company. It's under CCP control. Those are two big risks, which we're not going to get into in this video. But, yeah, look, JD looked like it was breaking out a couple weeks ago, a couple months ago, but now it's fallen back down to earth. It hit $35. Now we're back to $25, coming under a critical support. If I extend this to the right, you guys can see we broke under $28, $29. That was a major support level for the stock. Now we're back at 25. So I'm not loving that. JD's looking to do 85 cents EPS versus 75 cents from last year on revenue of $40.86 billion versus $38.2 billion from last year, and that would be up around 7% year over year. Growth has really slowed down there, guys, but who knows? It is beaten down. The stock is over the past couple of months, 30% in the red. So if they surprise, maybe they crush guidance, who knows? This could be a mover, in my opinion. We shall see. But again, Baba and JD, I'm not looking at these as trades, or as investments, only as trades. And we have two more stocks, guys. But first, before we break those down, don't forget to sign up to my mailing list. Like I said in the intro, I send out my top 3 stocks every single Monday morning for free. I'm sending another email out literally tomorrow morning. So check out the link down below. Put your first name and your email. It's free, no spam, no BS, just straight up stocks and charts. So check it out down below, guys. Now, stock number 6 is Deere and Company, also known as John Deere, ticker symbol DE, which this stock is also down a good chunk. So we have a mixed bag here in this video, guys. Some stocks are up over the last couple of months, but a lot of them are down. This one being one of them. DE's down about 18% from the recent highs. On the 1-year chart, we're not looking that pretty either. On the 3-year chart, pretty flat over the last couple of years. Not the best sign. And wait a second, do we have a descending triangle on this 3-year chart, which might slowly be playing out? I am not liking that at all, guys, on John Deere. And it looks like earnings are going to have to save the stock. Let's see, man. Earnings are coming up, and it looks like here, the 15th on Thursday in the morning, EPS is projected. Get ready for this, guys. Buckle up for this. $5.74 versus $10.20 from last year. So their EPS year over year is pretty much cutting in half, and their revenues at about $11 billion, which, man, I don't know. I'm not liking the setup here heading into earnings. So if they drop the ball, don't be surprised if this goes down maybe towards the lower 300s, 330, 325 is a big support. If that were to break, maybe we go even lower. So keep your eyes peeled on John Deere, Deere and Company, ticker symbol DE. And the last stock for the video, guys, is Applied Materials. And by the way, smash that like button. I challenge you guys, let's get at least 150 likes on this video, and make sure to subscribe if you haven't done so already. We're trying to get the 50,000 subs this year. So Applied Materials stock has been going through it. We hit 257 in the middle of July, and we got all the way down to 165, down 35%. And now, yes, we have rebounded a bit. We're at 190. All right, looking pretty good there, but still clearly in a downtrend, right? On the 20-day chart, we're not looking good. Clearly under the 180 SMA there. On the 4-hour chart, we're under the 50 SMA, clearly still in a downtrend. And earnings are coming up on Thursday, I believe, right? Yeah, Thursday after the bell. So they're looking to do $2.02 of EPS versus $1.81 from last year on revenue of $6.11 billion. So it's going to be interesting, man, to see how AMAT does. A lot of other players in the space have been struggling, have been seeing their stocks just get nailed, and obviously AMAT is one of those. So if we get good earnings, don't be surprised if we get a nice recovery here. And I think this thing has to retake this spot right here. I mean, this is a big support. It was at about $190 early in May, late April. We hit that spot, then rallied. So now we're under it. That needs to break. And if they're able to retake that point, maybe we could fill this gap to about 215, 220, that general range on Applied Materials. Kind of looks like an interesting spot. So what do you guys think about all of these stocks? Do you own any of them? Let me know down below in the comments. And again, don't forget to hit that like button and subscribe, and get up to 20 free stocks from Moomoo with at least a $100 deposit, and your uninvested cash for a limited time will earn up to 8.1% APY. And of course, that link is down below, and it's an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, I'll catch you in the next one.